Hello and welcome back, everyone. Today we will be discussing a new indicator that I came by accident, so I thought why not test it. We tested last week and the success rate was really good, really good. The winning rate almost 60%. 1 week of testing, 1 week of back testing is not enough to determine a winning strategy or a winning indicator, but 60% is not a bad number to work with. It's still under testing. If you would like to enter a trade with it, you can try it with small lots. So let's start. The indicator is called the RT. That's the indicator. We keep the setting all the same. We don't change anything. It's using the smooth moving average. You can change it to the exponential moving average, but I recommend you keep the setting as they are. So we'll use the 5 minutes chart, and here is how it works. We wait the price to cross the 200 moving average, a big engulfing candle crossing the cloud and the 200 moving average. Closing below the 200 moving average is where we enter our sell position. When do we exit? When the first green color appear inside the cloud. Once the first green color appear inside the cloud, we should exit the trade. It means that the price is about to change. It dropped almost 71 pips, but exiting a trade with a small profit is much better than seeing a reverse and losing your money. You could enter again after more confirmation, but it's still a safe takeout, and I do always recommend that you exit with a 20 pips in profit. 20 pips in profit is the safest exit strategy, especially with this indicator since it's a new one and still under testing. So 20 pips was almost confirmed that it drops 20 pips. So it's a good confirmation. If you want to take a risk, you could secure your trade with a trailing stop, so you would avoid losing your money. The stop loss is 5-minute candlestick closing above the 200 EMA. The stop loss is 5 minutes candlestick closing above the 200 moving average. Let's look for another opportunity. We do not recommend trading this time, but still we can look for opportunity. A big candle entry, 14 pips, and it closed also with 14 pips in loss. So at 20 pips is not always it's not something to take for guarantee. You could never take an indicator for guarantee or a strategy for guarantee. You should always manage your risks. You should always manage your money. But still, 20 pips is a good number. For example, a big candle crossed the 200 moving average, closed above it, you would enter a trade. 5 minutes closed below it, so you would exit the trade with 2 pips in loss. But again, it recrossed with a really big engulfing candle, so we could re-enter again in here and exit with 20 pips, or when the first red candle appears, which is also almost 20, it's 18 pips, or you could wait and get the 34 pips, and that would be with a trailing stop. So you would secure your trade and 20 pips, move your stop loss, and keep it running. Secure your 20 pips. It's always important to secure your 20 pips. Securing your position is what makes you a successful trader. If you allowed greed to control you, you will be losing money even if you had a winning streak. So again, crossing the 200 EMA, closing below it, another cross. Once it closed below the cloud, you enter a trade. So you enter a trade, it reversed few pips, and then almost 20, also 17, 18 pips. That is a really good profit. Or you could wait until the cloud turns green, which is about 5 pips. It's also a profit. with a good lot size number, it is a really good profit. Here is a bullish movement, but we are still under the 200 EMA, so we do not recommend that you enter a trade. It's never recommended to enter a trade against the trend. The trend is dropping, so you would never go against the trend, even if there is a good profit. Like, it came up, yes, it gave almost 27 pips, 33 pips, but it really dropped again. It gave a huge drop after it. So it's not recommended to go against the trend. One more opportunity: crossing the 200 moving average, closing below the cloud. Here is where you enter, because this was not below the cloud. Here is where you enter. You got your 20 pips in like 1 hour. The price continues, so you should stay in, secure your position and stay until the first green candle appears, which is 54 pips, and that was in just 3 hours. Just 3 hours, 54 pip with even a 0.1 lot size. That's almost $50, which is amazing. Let's try it with a different pair. Euro JPY. Look for opportunities. A big candle crossed the 200 EMA, or the smooth average, so the moving average, and closed above the cloud. So that's where you enter, and you almost got your 20 pips, even more. That's 22. You got your 20 pips. Secure your position and leave. If you waited until the red candle appeared, so you're gonna exit with 16 pips, which is also a really good profit. Another opportunity: crossing the cloud, crossing the 200 moving average, closed above it, you enter the trade, and with the first red cloud appearing, you exit the trade with 17 pips, or your 20 pips, which was much earlier. So you would made more money with the 20 pips strategy and moving your stop. Hope you learned something new. Test it on a demo first, then use your real money, and have a good week.